Hey guys, welcome to Deeper Depth. In today's video, we are going to break down the concepts of expenditure and expense and clear up any confusion about how they differ. So agenda for today's video is, first we'll discuss what is expenditure and its types, like what is capital expenditure and what is revenue expenditure. Second, we'll discuss what is expense. And the third most important, we'll discuss whether all revenue expenditures and expense are same. Before we dive in, let me mention that expenditure and expense are broader concepts that requires in-depth discussion, and their treatment can be varied depending upon the situation. However, in this video, I have tried to summarize these concepts very precisely to make them easy to understand. So without wasting time, let's get into the topic. So let's start with the expenditure. What is this expenditure? In simple terms, expenditure is the total amount a company spends or the liability it creates in order to acquire goods or service or assets which are generally useful for companies' operations and growth. Now, expenditure can be lead to either short-term or long-term benefits. For example, when a company purchases raw materials, it benefits immediately by using them to produce final goods. On the other hand, purchasing machinery provides long-term benefit, as machinery can be useful for many multiple accounting periods. Depending upon the purpose of spending, expenditure is categorized into three types. One is capital expenditure, revenue expenditure, and deferred revenue expenditure. In today's video, we are only focusing on capital expenditure and revenue expenditure. However, if you want a detailed video on deferred revenue expenditure, let me know. First, we'll discuss what is this capital expenditure. Capital expenditure is the total amount a company spends or liability it creates in order to acquire long-term assets such as machinery, patents, or buildings. These assets provides benefit for over multiple accounting periods. The main purpose of this capex is to increase the company's productivity or capacity, which indirectly contributes to increase in revenue over a long run. Suppose if a company purchases new machinery and this new machinery can lead to increase in the productivity of the firm, and then over a period of time this productivity can lead to higher revenues. Revenue expenditure. Revenue expenditure refers to the cost incurred to support daily operations of a business. These expenditures provide short-term benefits and are necessary for maintaining the company's revenue generating activities. The main purpose of revenue expenditure is to maintain the existing revenue levels of the firm, unlike capex, which aims to increase the revenue levels of the firm. Examples of revenue expenditure is annual maintenance charges for purchased machinery or labor cost to operate this machinery. Let's discuss what is this expense. Expense refers to the cost recognized in the income statement during a specific accounting period. These costs arises either from current year spending or benefits derived from past expenditure. Confused? Let me put with an example. First we'll discuss current year spending. Examples like annual maintenance charges or labor cost, which are directly linked to company's operations during the same accounting period. So these costs are classified as revenue expenditures and charged it as expense in the income statement. On the other side, benefits derived from past expenditure. Example, suppose a company purchased a new machinery, which is a capital expenditure, and the cost of this machinery is not immediately charged as an expense. Instead, as the machinery is useful for multiple accounting periods, which is useful for over a time, there is a reduction in the value, and this reduction in the value is known as depreciation, and this depreciation is charged as expense in the income statement. So whenever the company uses the machinery for that particular period, there is a reduction in the value, and that reduction value is known as depreciation, and that depreciation is charged as expense. Now let's address the common question whether all revenue expenditures and expense are same. The short answer is not really, but they are closely related. Here is why. Revenue expenditures are recorded as expense in the income statement because they are incurred for the company's day-to-day operations. However, not all expense can be categorized as revenue expenditures. Let's talk with an example. Donations. When company makes a donation, there is a reduction in the company's net income. So it has to be recorded as expense. But this expense is nowhere related to company's day-to-day operations or long-term asset. So this cost is being categorized as non-operating expense but not as revenue expenditure. Now let us consider another example which falls under different categories based upon the situation. Example is lawsuit charges. If the lawsuit is related to a contract which impacts the company's revenue, such as dispute with the client over a payment, then the lawsuit charges will be classified as revenue expenditure. However, if the lawsuit is related to protecting a long-term asset such as trademark or copyright, then the lawsuit charges will be classified as capital expenditure and the lawsuit charges will be added to the asset value. On the other hand, if the lawsuit is unrelated to revenue or asset, for example, company has been charged for regulatory breach, then the lawsuit charges will be simply recorded as general expense in the income statement. So to sum it up, all revenue expenditures can be expense, but not all expense can be revenue expenditures. I hope I have clarified you the difference between expense and expenditures and how they are related. If you have any questions, please let me know through the comment box. And for more such videos, please like the video and subscribe to my channel. See you in the next video, Deeper Depth.